everyone, and welcome to the next FP&A Trends webinar, Empowering FP&A to Bridge the Strategy Gap Once and for All. My name is Larissa Malnichuk. I'm a founder and a CEO at FP&A Trends Group, an international FP&A board. And I'm so happy to be here with you. So the main mission of our global webinars is to share the latest trends in developments in financial planning and analysis in FP&A. A quick reminder about the agenda for today. So it will be a very interactive discussion of two thought leaders on the area. And we are going to look at the pitfalls of traditional strategic planning process. And then we will look at the problem of life cycle profitability. So how to analyze this in portfolios and also with life cycle profitability in mind. We will be talking about target setting in this agile, incredible world, and of course, how we can use portfolio management techniques for strategic planning and for FP&A, and how FP&A can become the leader for change, because the whole purpose of this webinar to see how in this new world FP&A can help. And of course, there will be some conclusions, recommendations, and Q&A session as well. Let me very quickly introduce to you our two thought leaders. So one is joining us from the US, Mike Hartwait, and Michelle Hazendong joining us from Belgium.
Great to be here, Liz. Thank you.
Fantastic to see you both. Mike Hartwait is a strategic finance thought leader, and we know each other for more than 7 years. Actually, at my last corporate role, when I was had global FP&A responsibility, we collaborated with Mike on the area of strategic planning and strategic finance. And at the moment, Mike is a corporate finance director at Walmart, but obviously today's presentation is his own opinion and not the view of the company. So this is something to warn about. So great to see you, Mike. And today you are going to talk about strategic finance from finance and FP&A point of view.
Yep, absolutely. Looking forward to it.
Thank you. And then meet Michelle Hazendong, Global Solutions Owner, Financial Planning and Analysis at SAP. Michelle is very passionate about the subject of strategic planning and exactly how the modern technology and all this analytical advancement can help to bridge this strategy gap. So nice to see you, Michelle.
Great to be here. Thank you for having me, Larissa. So looking forward to the discussion today as well.
Thank you so much. Let us move on. My quick introduction. So I'm based in the UK, and I'm former practitioner, a member of Chartered Institute of Management Accountants, and also I hold FP&A certification. And for the last 3.5 years, we expanded international FP&A board to 27 cities, 16 countries, and 4 continents. And obviously, we will continue traveling next year when the situation is good for traveling. But at the moment, we travel in digitally. And it's so great to have today more than 570 registrants from 59 countries around the globe. So it's truly global webinar. Thank you for being with us. Just to remind you about some of the rules and some of the household items for today. So we would like this one hour webinar will be quite interactive between our panelists, but also we would like to hear from you. So there will be 2 polling questions. There will be interactive Q&A session, and starting from the first presentation, you can send your questions using the chat box. Networking is important for us, so if you would like to join our LinkedIn network, to connect with our speakers, you're welcome to do this, but just mention this webinar. Presentations are available right now to the downloads, to the handouts to this webinar, but also not later than 2 days after this webinar, we will send you handouts, presentations, and the recording. And of course, it would be wonderful if you can take part at the survey just after this webinar. Before we start, I would like to say thank you so much to our global technology partner, SAP, one of the world's leading providers of modern FP&A solution. Thank you so much, SAP, for your global support. And I would like just to put a framework to this discussion. And I really like this opening quote. Many years ago, Sir Winston Churchill mentioned that however beautiful the strategy, you should occasionally look at the results. So it was so many years ago, but we still have this problem. And some amazing story for you. So the first strategy book in English language was published in year 1962, and this is exactly the book that was published. But what happened after this? More than 20,000 books on strategy subject were published after this. And you can imagine that if we calculate this in terms of days, it's almost equivalent that one book on strategy was published every single day, 365 days a year for the last 58 years. But then look at these results. The latest statistics from Cascade. It's amazing that 67% of well-formulated strategies failed due to poor execution. So this is the latest results. And only 2% of the leaders are confident that they will achieve from 80 to 100% of their strategic objectives. And the last one, absolutely amazing, which shows that there is no integration between strategy and different level of planning processes in organization, that only 42% of managers and 27% of employees get access to strategic plan. So, so many years after the first quotes and after the first book, we're still there. And the reason why we think that this is the time for FP&A to take responsibility for strategic planning process, not to take responsibility, but to be on the table, you know, to be to support this process, definitely, because this is the evolution of strategic thinking. So it's all started from budgeting and control, and then growth and diversification, competitive advantage, a lot of theories on strategy. And we still use SWOT analysis and the 5 forces for our strategic planning, and, you know, many other techniques. But today's world requires agility. So this is the new world that requires agility, and it's all about analytics and using data and using technology and collaboration and scenario planning. And definitely FP&A has the role to play, and if not to lead the strategic model and advancements in how we can integrate different planning processes. So I would like to give floor to Mike Hartwait with the first slide. Let us start our discussion about strategy.
Thank you, Larissa. Thank you, Larissa, and good afternoon, good morning, good evening, everybody. So I think Larissa really painted a good picture to begin with. And quite frankly, I'll take it a step further. So is strategic planning dead? You know, what we come to realize is that management doesn't really understand it. The CFO doesn't fully trust it. And quite frankly, as a result, organizations really don't rely on it. Let's take that a step further. What we're seeing is that strategic planning at best is becoming a target setting exercise for next year's budgeting process. But really at worst, it's turning into a complete waste of time if no one's trusting it, if no one's using it. Now, many are going to argue that, you know, strategy execution is the reason why we don't, you know, realize our strategy. But I'm going to argue that that's only the effect, right? That's not the cause. I'm going to argue today that the cause is actually 2 things. It's one, it's poor integrated planning, which we'll talk about first. And then the second one is just outdated approaches to strategic planning. So that's the overview. Let's dig in. Let's go in one slide deeper if we can, Larissa. So I'm going to spend just a minute here and talk about integrated financial planning. Now, I'm not going to drain this or spend a ton of time on this. I just want to give you kind of a fluid motion and a fluid feel for how strategic planning really should operate within financial planning. I won't talk about I'll talk about strategic to financial. I won't talk about financial to operations. Obviously, that's a critical point, but for this presentation, I'll stay more in the strategic and financial. So I want to start with the red part of the circle first and foremost. So what we really need to focus on in a strategic planning exercise is continuous screening. Now, that's not just continuous screening for a period of time. That should be continuous screening for the entire year. So we should be proactively looking for opportunities and threats. You know, one of the things that we've talked about more recently in the last couple of years is the idea of a black swan. The only way you uncover a black swan, you can't use statistics to find a black swan. Statistics are blind to black swans. We can't use AI, they're blind to black swans. We have to continuously look for opportunities and threats. We have to look for things like COVID-19, and we have to look for opportunities as well. So it's a continuous screening exercise that happens throughout the year. From there, it's really important that we take those ideas and we start to have a conversation around those ideas. Now, it sounds pretty basic, but we need to get that buy-in across the organization. We need to discuss, we need to debate, we need to build consensus with leadership and top-level management on what scenarios that we're seeing and what reality could look like. We need to make that a more inclusive exercise rather than just something that happens kind of at the ivory towers. And then that obviously dovetails into kind of your more traditional financial planning. So we should cascade down those budgets down to a level that's meaningful. Obviously, as that comes around and we start to realize actuals, we may reforecast, we build that back up. Now that may recommend that we kick into another continuous screening exercise, and then the process just kind of continues through. So just a couple examples. Again, continuous screening, that's how we can look for things like a COVID or a black swan. It's also how we can look at things like an acquisition, you know, and bring that in and throughout the year kind of add that into our budgeting process through this process. So it's a very agile process, but it's a very integrated financial planning process. It's not just a kind of rolling forecast approach. It's a full, you know, integrated financial planning process. So Larissa, I'll just stop there. I'll throw it back to you for any questions or comments.
Thank you so much, Mike, for starting this conversation about the strategy integration process. For us in FP&A, definitely integrated FP&A, this is such a hot subject at the moment. And one of the ways, the best practices for us to do this, it's through cascaded drivers, driver-based model, and one platform. And I would like to ask Michelle to give the view on this subject from technology, from analytics point of view.
Thank you very much, Larissa. And let's say indeed to help translate this into, let's say, a technology picture. Let's have a look at how SAP looks at this. And of course, the drive is not technology. The drive should be basically coming from the business considerations, basically, which were addressed by Mike. And I think what I heard from him just a minute ago is very much in line with basically our how we translate and how we look at it also from a technology perspective. So let's say we also see that, let's say, overall there's a strong belief across the world, also when talking to a lot of organizations, in what we call collaborative enterprise planning, which is basically just another name for integrated or driver-based planning, where basically the different operational drivers are the key, making sure that we can connect, let's say, sales, HR, other information together in one place, and let's say provide the platform where, let's say, the different domain leaders are joining forces, exchange ideas, collaborate really in every sense of the word to ensure that they can crowdsource basically their plan by linking operational and financial planning together on the different levels, because it's basically also up to the level of strategic decisions that you need to make. So let's say that's a one platform which we provide, and I'll just hand it back over to Yuli for now, Larissa.
I think it's a good idea to understand what is happening in the world of our participants for different parts of the globe. And that is why I would like to open the polling question, the first one from two. And it's all about your current integrated FP&A. How integrated is your FP&A right now? So I'm launching the polling question, and if you can start voting, you should choose only one version. You should choose only one of those that is true for your current organization. So how would you describe your current level of integration, FP&A integration? Not integrated at all, integrated between finance and operations, integrated between finance and strategy, fully integrated FP&A process. So please, if you can continue to vote, I can see that more than 55% of you voted now, just a few seconds. And I'm closing the poll and I'm sharing the results with all of us. Let us see what is happening. I can see that 23% are not integrated at all. It's almost 1/4. Integrated between finance and operations, almost half of you, and only 18% integrated between finance and strategy. So the gap is there, definitely. Fully integrated FP&A process, not bad at all, 12%. Mike, what would be your quick 30 seconds commentary on this?
Yeah, thanks, Larissa. You know, I'm not surprised. This is about exactly as I thought it would look. Typically, you know, there is more driver relationship between the financial planning and the operations. So that's what I would expect it to be the top one. Obviously, from my perspective, I think this just shows a lot of opportunity out there, a lot of opportunity on the table to really get that full integrated FP&A process. But yeah, I think this is kind of what I would expect to see. It sometimes seems like it'll be easy to add strategy into the integrated process, but it's actually, you know, in many cases very difficult to do with spreadsheet technology today.
Excellent, thank you so much. And very quick commentary from you, Michelle.
So I think, let's say, looking at implementations of our particular software, let's say the majority of, let's say, those are indeed in the direction of integration between finance and operations. Luckily, that's basically increasing, and I'm glad to see that it's already at 47%, although there's still a lot of, let's say, room for growth. What I am astonished about, and it's in a positive way, is basically that here we already see, let's say, 1 out of 10 just about going further in the direction of integrated FP&A processing. So, like, happy to see that. I think it's bringing a lot of value for sure, and we would definitely, I think all of you, we all of which would love to know more about, let's see, how your experiences are, let's say, especially those 12%.
Thank you so much. Thank you for your commentaries and thank you for your votes, everyone. And we are moving on. Mike, the floor is yours. Let us move on.
Sure, thank you. Okay, so we kicked off this presentation. We talked about the two problems that we're seeing today. One being more on the integrated planning, but the other being on the outdated approaches to strategic planning. So what I want to do for a few minutes is start off and with just 2 slides talk about kind of what are the most common pitfalls for strategic planning. So the first one is really in the way we define strategic planning. So most consulting company, most kind of thought leaders, I guess, in strategy will always reference strategy as a resource allocation exercise, where you're taking kind of next year's resources and you're allocating them this year to put, to throw good money at good things and so forth. The reality is we're seeing problems with that. What happens is when you're trying to allocate resources, you end up getting the divisions in your business or the segments within your business fighting over those resources. And when they fight over those resources, what they end up doing is they end up kind of trying to do a sales pitch for why they need those resources. So they're saying, if I could just get a little bit more funding, I could do some amazing things. And then they all kind of tell that same story. So what ends up happening is each year, the strategic planning process turns into a hockey stick growth. And we kind of call this failure to launch. So every year you sort of always feel like you're in year 1 of a strategic plan. Let's say it's a 5-year plan. You're always in kind of year 1. I just need that little bit more money and I'm gonna take off. And the problem is it really erodes credibility in the strategic planning process when every year it's just another hockey stick kind of just moved a little bit over. Sure, there might be some incremental wins, but in general, those large hockey sticks never really tend to materialize, and it just really erodes the process. So again, that has to deal with the fighting over next year's resources. And there has been some recent publications on this as well, and I think they're spot on in calling that out. We're definitely seeing that. But let me jump to the next slide. Let me go through another failure that we see within strategic planning, the current process. So we call this sort of the no reason to believe approach. So people say, okay, I'm going to do a strategic planning process. So the problem falls down in the process this time, not the definition. And they say, well, what do I culminate? And they kind of think, well, the end product is a 5-year plan. So they go off and they build a 5-year plan, and then they try to justify that. But the reality is they haven't gone far enough. So, they'll do the 5-year plan, but unless you anchor this in something that's accountable, it's never going to materialize. So the best way to anchor that into something that's accountable is to take your 5-year plan and to translate that into a value creation. So how much shareholder value creation did you add? Figure out what that implicit value add is, and then you have to go off and you have to link that to executive compensation. Now, I know as FP&A, we're not responsible for that entire process. We need to get HR involved. We need to get legal involved and so forth, probably some consultants involved, maybe even. But we need to link our strategic planning ultimately out to executive compensation. That's how we make strategic planning accountable. And with that, what happens is you're really only sitting on two legs of the table. And of those 2 legs, you have kind of a target setting exercise and a 5-year plan, and everyone just leans on the target setting exercise. So your 5-year plan just becomes anchorless. There's nothing on the backside that's kind of holding it down. And what's happening is people are only relying on year 1 to set the target. Everything else is just, it doesn't matter. So they use it, the target, and that's really turning into the only benefit we're seeing in a lot of strategic plans at this point. So Larissa, I'll pass it back to you at this point for any comments, questions.
Mike, thank you so much for raising this question of hockey stick and also the target setting. And for us in FP&A, it's definitely a very familiar area. And I would say that a hockey stick, this is the common side of not only strategic planning, but our budgeting and forecasting and operational planning. And also because of the targets and compensation, planning processes at every level of organization, they're very often very emotional processes. But with the new technology and with the new systems, we definitely can make it more analytical and less emotional. So Michelle, I would like to ask you to give your view on this problem.
All right. Yeah, just listening to what Mike just said, I think in order to reach this what I would summarize as joint target setting across the entire organization, across all of the different, let's say, domains, functional domains, sales, marketing, and so on, and really be able to concentrate on this end-to-end value for the organization, I think there's a couple of ingredients which we absolutely need to have in any FP&A supporting platform. And that's, first of all, let's say, well, the ability to really bring those different domain expertise together from a data perspective, and secondly, also make sure, related to this, is make sure that everybody is looking actually at the same single truth, the same figures, the same data elements, because otherwise we keep on discussing about, let's say, who's having the right information. If you want to really come to one value view, that's basically a core element which I think everybody is struggling with, and that's what any FP&A supporting platform definitely should absolutely be concentrating on. And then let's say from a process, and let's say on how to collaborate together, thinking about different, let's say, elements in that process, which we need to be able to combine, is not only just be able to analyze or run reports, but really be able to discover what's ongoing, how to improve, and therefore basically plan, simulate, predict, also allocate, for instance, in terms of costs, and really making it possible to act upon it. And then when talking about actionability, I think, let's say, with modern platforms, there's much more effort put in there to really make it possible to instantaneously adjust where needed. I think in the crazy COVID times we're all living in today, I think that's more and more an evidence that it's needed to be able to react or to act event-based. And that's basically where a lot of automation comes into, but I don't want to go too far into that direction just yet, so I'll hand it back over to you.
Michelle, thank you for your view on this. Definitely FP&A has the role to play here, but one of the biggest problems from our survey, this is the data quality, and also not many have this flexible collaborative technology, and this is those barriers that we have to help with the strategic planning process. So let us move to the next question, how to measure the strategy. Mike, the floor is yours.
Thank you, Larissa. So that's great. So we just got done talking about we're talking about strategy, we're talking about how it's outdated. We talked about some pain points. So now we're logically moving along. How best to think and measure strategy? Well, let me kind of say this one a little bit backwards. We typically think about strategy in terms of scenarios, what ifs, so forth. But if we take a step back, actually, I would recommend that we break strategy up into two terminologies. They're not used that often, right? So there's macro strategy and micro strategy. Micro strategy, so I'm starting on the right this time. Micro strategy is more of that scenario-based strategy that we're talking about. So it's usually taking some sort of real options, so real options we have available to us, and looking at kind of what would happen if we did this, what would happen if we did that. We can look at opportunities, so good things. We can look at threats, black swans, so forth. Look at those, try to avoid those. That's all great, and that definitely needs to be part of the strategic planning conversation. But what we tend to see is that people dive right into that, and I actually think there's a missed opportunity there, which is massive. And quite frankly, I would say that most of this presentation is on this point right here, and that's that we need to think more about the macro strategy. So the macro strategy is more of the life cycle of the strategy. So let me kind of give you an example of that. So there's a problem in the world or in your market. You want to solve that problem, okay? The only way to solve that problem is to recognize that problem, invest in that problem, break down the bottleneck that exists in the marketplace today that's making that problem not solvable. Once you've invested enough in that, you want to make sure that you've hit product market fit, you're turning up the curve, you're seeing that you've actually broken the problem, you've broken the bottleneck, you have empirical evidence that you're solving that problem and that there's a demand for that in the market. Then you're walking into that new opportunity that you've created, you're maximizing that opportunity, that green field that you just walked into. You're keeping your customers at bay, you're building up market share. Eventually you're getting to a point where you're starting to make real positive cash flows and even profit at the top. You're milking that for as long as you can as a cash cow, and then at some point customer behavior changes, customer trends change, technology changes, things happen, and you start to kind of decline off. That's the conversation we need to push strategic planning to. So depending on the stage that you're in that life cycle, has everything to do with the analytics that you're looking at that point in time. It has everything to do with the scenarios that you're running at that point in time. We need to get back to that conversation. And not only do we, not only as finance people and FP&A people, but the conversation of a life cycle, or what I'll actually call a JCurve, is an easy conversation to have. It's the bridge for us as FP&A to go out and talk to other people within the organization and say, hey, look, here's our strategy, here's our life cycle, here's where we think we are on that life cycle. And it's critically important because we see all too often people are running scenarios that are more plateau stage, when in reality they're still in kind of investment stage, or maybe they're in growth stage. And I'll give you some examples on the KPI side. So if you're looking at like a return on investment calculation, an ROI is great if you're at the top, if you're in plateau, or maybe you're in decline. Yeah, you obviously maximize your ROI. But if you're in an investment stage, you're throwing money at it and you're not getting a return. So does that mean you should get out of the business? Not necessarily. You're looking for product market fit. In growth, you need to fuel the beast, right? So you're looking at different ratios. You're looking at growth ratios. In decline, you might be looking at churn, or customer retention. Plateau, you might be looking at cash flow. So we really need to realize that we need to adjust strategy, not adjust the strategy, but adjust our tactics as we go through that process, and it's really critical. So I'll hand it back to you, Larissa, for questions or comments I think at this point.
Thank you so much, Mike, for sharing this. I'm personally very, very passionate about this particular subject, the subject of survival analysis, or how you call it, the life cycle profitability. I remember my own experience when I was managing big portfolio in one of the famous banking group. And when at that time, it was more than 10 years ago, we did this in Excel actually. We looked at the survival clusters of our huge portfolio, hundreds of thousands customers. And we tried to look at the survival and also survival analysis technique at a life cycle, but also to forecast this, what is going to happen in the future. And you know what, even with this simple analysis in Excel, we were able to change the strategy around this portfolio. And of course, look at this as a portfolio of survival curves, or JCurves, how you call it. It's a very, very powerful technique that anyone in FP&A can start using. So Michelle, obviously the modern technology allows us to do this quite easily. So what would be your commentary on this?
Yeah, I'm not sure whether it's an easy exercise, but I think let's say over the years, what we definitely see is that, let's say, because of all kinds of technological new and added approaches and visualizations and ways of collaborating, I think, let's say, the pain point cannot, let's say, or is less and less on the technology side and more on, let's say, okay, can I make this let's say real from a business perspective? Now, to differentiate a little bit on where technology and how technology can play a role in the macro strategy area versus the micro strategy area. I think starting with the easiest one, the micro strategy area, I think there, let's say, the typical, you know, newer capabilities in terms of predictive forecasting, but also what we call smart discovery and smart insights capabilities, which are really making use of, for instance, machine learning algorithms and more, to learn basically also from past experiences over time, and therefore, let's say, step by step move into the direction of prescriptive analytics, so that we can basically push even part of, let's say, this exercise in, let's say, the back of automation or automated by the system, so we can really concentrate on those critical points where we need to concentrate on, where we can't really learn from the past. Because of course we can't solve everything with, for instance, a simple prediction or so. That's, let's say, basically one area, let's say, where we can automate quite a lot. On the macro level, I think it's a little bit less about the automation, but it's more about indeed asking the right questions and trying to really get to do an overview, the entire portfolio plan. And there I'd like to touch upon a couple of other techniques which we've been developing over the last couple of years. First of all, let's say what we call search to insight, just really in a very human way, ask questions, type questions, or even ask questions to the system on basically information that you seek, rather than let's say having to drill through all kinds of KPIs or whatever. And then a second one, which is let's say really picking up incredibly, is, let's say, a value driver tree based visualization, where we really can connect all of the different drivers and KPIs and domains across the entire organization and across their, what I would call the maturity state in the JCurve, where we can really bring all of those elements together and start also simulating and see what a decision in one area, how that would potentially impact a completely other area. So that's just, let's say, the tip of the iceberg, but that's a couple of comments I thought would be interesting for everybody attending today. So back to you, Larissa.
Thank you, Michelle. I think it's a great opportunity now to hear from our audience how what is happening in the area of scenario planning for FP&A. So let me launch the next polling question. Scenario planning, this is the great opportunity to check how are you with integrating different planning processes and whether you are able to do this in real time and so on and so forth. So please, can you choose one of those options that is the best description for you? What is the best description for your scenario planning process, FP&A scenario planning process? So they run in real time, let's say at different levels of your organization. Scenarios are run in less than 1 day. We can run scenarios, but it is very time consuming, and we are unable to run scenarios at the moment. Please, can you continue to vote? More than 55% of you voted. Just a few seconds. I'm closing the poll in a moment, and I'm sharing the results with everyone. So I'm sharing the results, and we can see that only 4% of you can run scenarios in real time. 17% in less than 1 day, which is not bad, but for modern environment, it should be really in real time if you can. And of course, those that can do this, the majority of you, almost 70%, but it's very time consuming. And 10% unable to run scenarios. And you know, we do such surveys from around the globe, and this is such a conclusive and such a consistent picture. Mike, what would be your commentary, the quick one, 30 seconds?
Yeah, sure. Thanks, Larissa. Yeah, I'll keep it really quick. So, you know, the thing that comes to mind when I see this is calibration. So even those people that can run scenarios, I'd ask, you know, do you feel like calibration of that is a good level of calibration? So, you know, are you getting a scenario at the right level of detail? Is it, you know, a lot of times what we see is it's too high level, or it's way too detailed and just takes forever. So it's, you know, is it at that exact calibration that you want to run? And that's always what's the most difficult. So I'll pass it back to you.
Thank you so much, Mike. Michelle, what would be your 30 seconds on this?
In very short, I think, let's say, all of the developments we are doing today or the past couple of years and ahead of us, I think they're like, I'm pretty sure they're going into the direction of hopefully helping out many of you who are in deep trouble at this moment, especially if you're not running or able to run simulations, or basically that's far too time consuming. I think that's not what the world needs today. So I hope, let's say, you will see some value in, let's say, technology, whether it's the SAP or other technology, preferably ours, of course, to get into that direction and investigate what technology can mean in this perspective. I think it makes a lot of sense.
Absolutely. Thank you so much for this. But I would like to remind that also the driver-based model and cascaded drivers are important, because if it's only technology and your static system, it's not going to work. But it's a good time. And thank you so much to all of you who voted today. But let us move on. And let us look in more details on where is my JCurve. Let's look at this JCurve in more details. Mike,
great.
The floor is yours.
Yeah, thank you very much, Larissa. Yeah, so we're back on the JCurve. So let's go a step further. So a lot of times in FP&A, people will say, I get the JCurve, learned it in college, learned the life cycle, but you know what, I can't find it in my business. Where is it? And the reason is usually it's because you're looking at a very consolidated level, right? And when you look at things on a very consolidated level, it tends to look more or less like a straight line, like that incremental growth we talked about earlier. In fact, if I just even take an example here in math, and I'll go through this really quick, a lot of times people will do valuation multiples, for example. So let's say you've got a value target, you've got a metric like EBITDA, so your last historical 12 months of EBITDA, let's say, and I just multiply it by multiple, there's my valuation. If you break that down using kind of Gordon growth formula, that really means you're saying 1 plus G, which is the growth rate, divided by your cost of capital minus your growth rate. What you're really saying in your terminal value calculation or in your multiple calculation is that I'm really just looking at two variables. I'm looking at a growth rate and I'm looking at a cost of capital. You're taking away all the insight out of the entire equation. You're really, you know, making it difficult for management to make really critical decisions. What you need to do is move over to more of a portfolio approach and realize that actually within the business we have multiple JCurves and they're at different stages of the life cycle. You know, the only companies that really don't have multiple life cycles are startups. I mean, that's almost my definition of what a startup is. It's a company with one life cycle curve. It tends to be that most companies have multiple life cycle curves. You need to find out where, you know, what are the strategic business units. Those are the little dots along the JCurve. Figure out where they are and manage them accordingly. Obviously, what happens is you get more towards the top and you're in plateau. That's when you're a cash cow. You can start to reinvest in new ideas. We need to think about investing our money into new JCurves, not just fighting over resources. If we start JCurves, we can have that kind of healthy conversation. That's where we build growth. That's where we build growth and valuation is in early stage, and we need to have that kind of healthy conversation and make that part of the strategic planning process. The last thing I'll say on this is that in finance we tend to kind of hate the concept of fail fast. We almost think like that. Why waste? But we need to have ideas in the pipeline. We need to have more early stage strategic business units. Some of those will turn into tomorrow's big ticket SBUs, and we need to maintain that healthy portfolio. So Larissa, I'll pass it back to you for questions there.
Thank you so much, Mike. Definitely FP&A has a lot of definitely has the role to play in this portfolio management, and also looking at the product JCurves and understanding the dynamics. Everything what we do in our traditional management accounting, this monthly and quarterly and yearly and forecast, definitely they don't give the true picture of profitability. Michelle, what would be your commentary on this?
In fact, one thing you just said, Larissa, on the, let's say, the multidimensionality, that's basically also bringing us back to, at the same time, to, let's say, the different functional domains we were talking about earlier on, and being able to connect all of those different domains and also look at the different, let's say, dimensions they individually or jointly might be interested in. I think that's the first thing which I definitely wanted to emphasize. And basically also it's those dimensions that definitely need to be basically pulled into the entire let's say portfolio discussion that that Mike was just pointing out to. Now that's typically what let's say the more modern EPM let's say applications are capable of doing. However, in our opinion, there's one element which is typically missing there, because the first part is really the horizontal integration, I would say. But what's missing, let's say, in order to really be able to act quickly and, as Mike told, I put it, fail fast and basically recover for them, basically have different scenarios, but also be able, as I mentioned before, to really be able to act instantly if a particular situation occurs, which I think we all know from these last months. The integration directly from this, let's say, platform into the transactional source is becoming more and more important. And that doesn't mean that you always need to go to the nitty-gritty details. You can basically still do certain aggregated exercises, of course, but that integration is very, very crucial. And then specifically for FP&A, which is still very close to finance in a way, and where, let's say, finance overall is the driver for many of these activities. I think also there, let's say, being able to look at, let's say, group-wide financial information, meaning consolidated information, is crucial as well. So having that consolidation engine inside that same platform, not having to exchange between different platforms or reconcile all over the place, I think that's a couple of crucial points, and that's exactly the points that we have been heavily working on in the last couple of years to make it real, and actually that integrated platform supporting what we could call proactive business steering end-to-end is what is available, let's say, right now.
Thank you so much, Michelle. Valuable points, and let us look in more details on this JCurve.
Yeah, so
Mike, yours.
Yeah, sorry, Larissa. Yeah, so just jumping back, so I'm just gonna kind of put a bow on the JCurve concept here one more time. So remember, we started off talking about kind of the typical focus of strategic planning. That's really just sort of, if I get another little bit of investment, I'll just kind of continue on. And a lot of people will challenge me on that and will say, well, that's all I really need to know to kind of do everything you're talking about. If I only need to do a DCF on 5 years and then add a terminal value, and that's like all I really need, and I can pretty much get by. But what we want to advocate is actually understanding the whole life cycle is critical for that strategy, right? So you're incorporating more than the typical strategic planning focus. You're focusing the origin story, talking about that. So the origin story is, what was the problem we went out to solve? You know, did we break down those barriers? Did we create an opportunity for ourselves? What was the true cost, both in, you know, cash as well as timing for us to do that? Did we get to that product market fit? Product market fit in FP&A or in the corporate world tends to be a marketing term. We need to embrace that as a FP&A term, because that'll tell us when our investments are great investments. You know, when we can get to product market fit, that's where the real opportunity comes in. So did we solve that problem? It's empirically evident we did. Fine, now let's feed the beast, right? Let's fund that a little bit more because we're in growth stage. So let's look for how high can that thing go? So it's really critical to have the origin story as part of your strategic planning conversation. But then on the outside, we have to realize that the outer years, although people are making bets, right? We're kind of gambling as to how long we think we're gonna, you know, have that farther right tail. But that's the value realization, right? The value creation is in the first two stages, right? That's when people make speculative bets as to what the value of this thing's gonna come out to be. The last two is the realization of the strategy. And that's critically important as well. So, you know, now we can manage the cash flow of that. We can, you know, we can try to optimize and maximize how long we can stay in those, you know, in plateau. The longer you stay in plateau, the more the value of the company. In decline, why would you ever want a company in decline? Well, if I can get a company in decline, I get it to stay there for a lot longer than most companies. I'm creating value even though it's in a decline stage, right? So if you're in the, you know, newspaper business or whatever the case may be, you know, if you can extend that out, focus on your customer base, decline can be very, very, you know, value creation activity. So it's really important that you come into your strategic planning conversations. Let's make this a regular meeting and let's say, here's where we are. This SBU is currently in this stage, and we need to focus that conversation. We think we're going to be in that stage for a few more years. You know, have that full-on conversation. It's really important. So I just wanted to paint that, and then why don't I just go to the next slide and just really kind of give a recap of things, and then you know, we'll kind of open it up to questions as we go through here. But I just want to take a step to kind of just recap everything. So the first thing I think we need to do is we need to think about strategic planning as a continuous exercise. It can't be just an exercise that we run, you know, 2 weeks, 3 weeks, a month, every year, and then we shelve the exercise. Sometimes strategic planning is a bit of a generic word, right? Everyone kind of uses it. I prefer the term strategic finance for this exercise, but it needs to be a continuous exercise throughout the year. We need to focus the conversation not on, you know, revenue, not on costs, not on certain financial line items. We need to focus it on cash flow, full integrated income statement, balance sheet, cash flow. We need to identify where the SBUs are, the strategic business units within our company really exist. That's the challenge most people have. They don't know where those are. Find those, map those out, and let's have the conversation there. Turn that into value creation, incentivize people on value creation, and so forth. Take a portfolio approach to that. Realize that you're not kind of monolithically looking at doing strategy for a segment of the business or a division of the business. You're actually doing strategy on the SBU. This is a great opportunity for FP&A to lead this process and to draw in other business partners, such as the strategy team, such as corporate development, so M&A, acquisition analysis, investor relations, treasury, you know, even non-financial function teams like, you know, marketing and so forth. It's an easy conversation to have, and it's so valuable. And then, you know, just kind of moving back to the kind of the platform. So make sure you have an integrated platform that can address, even if not on day one, it addresses everything. Make it a flexible platform that over time kind of add on and add on. Maybe you start with financial, add on strategic. Maybe you start with financial, move to operational, then strategic. Whatever the case may be, get a you know, have a game entire vision. So Larissa, I know you have about 10 minutes left, so I'll hand it back to you at this point. Maybe we can you know, incorporate some questions.
Thank you so much, Mike. Just a few points from Michelle before we go to Q&A session. And I would like to ask everyone to start sending your questions to us through the text box. So very quick commentaries, takeaways from you, Michelle.
Yeah, not a lot to add to what Mike was just saying. Of course, let's say me from a technology side, I think, let's say the main drivers should be coming from the business side. Of course, like all of the, let's say the first four bullets, let's say to put it simple, based on what we have looked at in the slide, in the entire conversation should be driven by business, of course. But what definitely can help them in realizing where they want to go is indeed having access to such an integrated FP&A platform, which should, of course, be a very much business-driven platform, integrating strategy to operation, let's say integrating all of the inputs from the different domains across the entire organization, being able to support, let's say, instantaneous activities and actions. And that's basically, well, that's basically it from my perspective. But it's definitely a business-driven, let's say, discussion overall.
Thank you so much, Mike, and thank you so much, Michelle. Definitely, this is the start of conversation, and this is such a subject that we need maybe the whole day to discuss it. But before we go to Q&A session, I would like just to finish this with this final quote that is a great conclusion from our discussion. It comes from Jim Collins and Jerry Porrells, those authors of book Built to Last. So building a visionary company requires 1% vision and 99% of alignment. And I think it's definitely true, and a great closing quote for our conversation. So let us start the Q&A session. And again, I would like to remind everyone that you can send the questions to us through the text box. And even if we don't have enough time to answer all of them, we can get back to you through email. Mike, the first question is to you. Which of the key functions, in your view, need to be involved into the recurring discussion for strategic planning?
Mm-hmm. Yeah. So are we? You're talking the functions? Is that what the question was, Larissa?
It was about the functions. Yeah.
Yeah. Yeah. I think I'll start by saying I really think the orchestrator, the activity there is in FP&A's hands, right? The pathway to making strategy a reality in my mind is through the budgeting process, right? You have to have your strategy, you have to set your target, you have to push that through to the budgeting process. So FP&A is in a great position to lead that, but that's the role they can take to then work as a business part of their areas of the business. So even just on the financial function side, as I was saying earlier, I think there's a huge opportunity to dovetail that in with like your M&A teams, corporate development. So when you're doing an acquisition, is that an acquisition that's going to help an existing SBU, move up the growth curve by keeping the competition out because you're acquiring them essentially, or are you doing an acquisition to start a brand new JCurve? So I think there's a great conversation there, obviously with treasury, to fuel those curves. Relations to be able to communicate that, hey, depending on what ratios we're looking at, that'll satisfy maybe later stage J-curves, but earlier stage about growth, and conveying that kind of blended portfolio approach, I think is critical. So I think, and then, in a lot of cases, marketing and strategy, I think there's an opportunity to tie into them very well. So I think you'll find that the J-curve as the focal point of the strategy conversation really opens the door for a lot of people to come in. And I think you'd be surprised how easy it is. The minute you start to show and flash up financials, especially when it's a 5-year projection on a single individual line item, no one believes it. No one recognizes it as everyone knows you're just throwing a dart at a wall. It's not the conversation you really need to be having.
Excellent. Thank you so much for your extended answer, Mike. The next question is to you, Michelle. What would be the best FP&A module to start the strategic planning process in your view?
I would assume that the question is about, let's say, what product or what solution, or let's say, or what component. Let's say from a component perspective, I think let's say nowadays it's mainly the combination of being able to analyze your data and let's say simulate at the same time. So basically bringing those two pieces together. Which we actually, from a product perspective, we're supporting. And I don't want to overdo the positioning there, but we do have, let's say, a solution within the SAP portfolio really doing that. It's called SAP Analytics Cloud, where there's a planning and a simulation component in there. I think that's, let's say, the starting point, I would say. And then let's say in a second iteration, you can basically go different directions. For instance, let's say with all of the iterations and fast moving changes today, let's say the integration to your, let's say your source data is really crucial. Of course, let's say integrating all data, it's, let's say, a humongous piece of work, but already having, let's say, end-to-end financial insights can already help a lot, I think. So that would be basically a second step I would immediately think of as pretty interesting. I hope that's giving a little bit of first step. That's basically also where we see a lot of interest from organizations going into. But the order in which and how and to priorities, of course, also depends on, like, for instance, also on what industry or type of business you're in. Let's say and especially in these crazy times, we see very big differences between different, let's say, types of organization. If, for instance, you think about, let's say, fashion, they're incredibly hit by what is happening in the world. But let's say retail or transportation is basically overall like hyping as never before. Or basically, well, people that have, or organizations that already have been working on in the area of online platforms, and basically they're let's say typically better coping with the situation than some others that are more traditional. That's basically, yeah, I know that's not really product, but let's say it all depends, of course, on your specific situation, but really starting from the combination of analytics and planning and simulation capabilities, which basically is brought together in one application these days. I think that's an overall very good starting point.
Thank you so much, Michelle. I think we have time for two very quick questions and for two very quick answers as well. And then please continue to send the questions to us. As I said, we will be able to answer and send emails to you. So Mike, the next question is to you. So your topic appears to be focusing on numeric metrics, but how about non-financial information? Experiential input from customers and employees that can be used in order to evaluate the value creation from the customer and other parties' point of view. So what would be your point on this?
Yeah, I mean, I'm going to be a little bit unabashful in saying that the only metric in my mind that that trumps all metrics is cash flow, free cash flow. So I think you definitely want to try to funnel the conversation as much as possible into free cash flow, and realizing that every business follows a predictable pattern of a but I think that's where the bet and the conversation, that's where we need to bring those people into the room and have that conversation. Hey, we think we're at this stage in the life cycle. Based on what you're seeing, based on the driver information that you're seeing, that's maybe not financially linkable per se, how does that impact the duration and how long we're going to stay in this life cycle? That's the critical component where we need to bring those people into the table, at the table of our strategy conversation. So it's, again, just talking about continuously being in the current state. And you can use data to prove that you're in that state, but it's a gamble and a bet to prove that you're going to stay there. And we need people from all sides of the table, both the analytical ones that can put some numbers together, as well as people that can kind of interpret the demand for the strategy, and that helps be focused in JCurve as well.
Thank you so much, Mike. And the last question before we conclude our Q&A session is to you, Michelle. So in this incredible world of change, what would be the ideal timeline for strategic planning throughout the year, and whether we have to do this at all because everything is changing so quickly? So what would be your view, quick view?
Actually, I would, let's say, answering that, well, let's look at the time, like in 30 seconds. I think, let's say, the approach which was just explained by Mike is an interesting one. It's not, let's say, a one moment in the year thing. If I, for instance, let's say, just look for a second internally at SAP, actually we're constantly looking at alternative scenarios, looking at, well, let's say, how we're going to evolve over time, what we should focus on in different areas, what product lines, what functional domains, what basically our strategy should be like. And I know this is a continuous discussion. That's basically also where, let's say, I know our board members and extended boards are sitting around the table, for instance, using exactly this value driver tree visualization, for instance, to make, let's say, all of the connections between all of the different elements and internal and external influencing factors which are moving around. It's not, let's say, I do it once a quarter. Basically, this is a continuous exercise. And also our belief that it's really so crucial to have a direct integration to your transactional source data, because you want to basically be on top of that on a daily basis, because of the fact that things are so quickly changing.
Thank you so much, Michelle. Thank you so much, Mike, and thank you to all those who asked the questions. I can see a lot of questions here, so you can still continue to send them to us. We will be able to distribute the questions and to send the answers back to you. Let me conclude the Q&A session, and just to give you information about our upcoming webinar. It would be on December the 3rd, and we already have hundreds of registrations from around the globe. It's to go deeper into the subject of extended FP&A, so how FP&A should be the baseline. So this is to continue to look at this incredible subject in more details. And finally, before we conclude, I would like to say thank you so much to you, Mike, and thank you so much to you, Michelle, for sharing your experiences with us. It was fantastic conversation, and definitely we can continue more in the following sessions. I also would like to say thank you so much to all the participants from around the globe. Thank you for being with us. Thank you for being active and asking questions and voting. And finally, I would like to say thank you so much to SAP for supporting us with this webinar. And please let us stay in touch and let us move FP&A to the next level. And this is the way how we can connect. See you very soon. Enjoy your evening, morning, or afternoon, or maybe night. Let us stay safe and let us stay focused on improving FP&A and strategic planning. All the best. Bye-bye.